Professor Steve Hanke, he posted a chart here from North Star. He says, according to my bubble detector, the U.S. stock market is once again in bubble territory. And North Star says we are in official bubble territory. The countdown has started. Yeah, in the short term, there will be noise. But if you look at these long-term charts, gold and silver still look very bullish, i.e. the dollar looks pretty sickly. I think, yeah, can you imagine if the stock market wasn't doing as well, if the economy wasn't doing as well, how much more rate cuts really this system would need?
Since 2022, gold has been a consistent outperformer, driven by geopolitical tensions and purchases by non-US central banks. These banks are adding gold to their foreign exchange reserves as part of long-term plans to diversify their dollar-denominated assets. Over the past 2 decades, gold has shown robust performance compared to the S&P 500, raising questions about whether this indicates a paradigm shift in the market. According to DataTrek Research, gold has delivered a 616% return during this period, while the S&P 500 has risen by 421%. Technical gold trader MarioInnecco is skeptical of gold-backed tokens, calling them mere representations of real value. Several players have entered the gold tokenization market. These include banks, fintech companies, and even gold-focused firms. HSBC, for example, launched its own gold token. BlackRock has also made headlines with a real-world asset tokenization fund. Concurrently, Innecco advises maintaining direct ownership of physical gold and silver as the most reliable form of financial protection. From a technical perspective, MarioInnecco believes Fed Chair Jerome Powell will determine whether markets face a major crash or melt-up. Citing Steve Hanke, he warns that the U.S. market is back in bubble territory, inflated by excess liquidity. Stocks were approaching bear market territory as recently as Monday, April 7th, and forecasters across Wall Street were raising the odds of a recession happening in 2025. Based on market trends, Innecco argues that a Fed rate cut may boost asset prices in nominal terms, but would further weaken the dollar, deepening the silent collapse in purchasing power. He expects gold to outperform in the long run, with the Dow-gold ratio continuing its downward trend. Historically, when the ratio breaks down and gold begins to outperform the Dow, it signals a change in the market, often marked by a shift of capital away from equities and into safer, tangible assets like gold, silver, and oil. Before we dive into MarioInnecco's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I suspect that Mr. Powell holds the key to whether we're going to see a major crash or a major melt up. But either way, if we see a major crash, he'll have to come in and cut. So yeah, there's a lot of frustration, a lot of people calling for a crash in the stock market. Professor Steve Hanke, he posted a chart here from North Star. He says, according to my bubble detector, the U.S. stock market is once again in bubble territory. And North Star says we are in official bubble territory. The countdown has started. You've been warned. So he looks at the NASDAQ versus M2 money supply, and the NASDAQ is breaking out. It's the highest it's ever been. But could it be that the crash and the deflationary collapse is going to be against this kind of money, this kind of measure of value, not the fiat dollar? And by this, I mean gold, of course. Well, I think there's a big possibility, and many people are not really factoring that in, and I am. And that's why, yeah, I'm not too sure if we're going to see a major crash or correction in the stock market in terms of the fiat dollar, right? But in terms of gold, I think that's different. So how would that work? Well, it would work that the currency, the dollar, the paper dollar would keep dropping very quickly versus real money, i.e. gold. And it would drop quicker than the stock market would go up. So the Dow gold ratio actually go down, keep going down. The S&P to Dow ratio would keep going down as well. So that's the way I see it. Either way, I think things are set for a huge, how can I say, event coming this week. If the Fed cuts this week, yeah, look out above in terms of dollars for the stock market, and look out below for the dollar in terms of real money, because I think the dollar index, which is a measure of the dollar versus other crappy fiat currencies, is not looking very good. So I've kind of merged here my first point that I came up with in the beginning of this video, and the third, right? The Federal Reserve, President Trump, Powell, and the markets. So that's how I see it. What about gold and silver? The last couple of days of this past week haven't done really too well. They've come off a little bit. Well, yeah, in the short term, there will be noise. But if you look at these long-term charts, gold and silver still look very bullish, i.e. the dollar looks pretty sickly. And I think, yeah, can you imagine if the stock market wasn't doing as well, if the economy wasn't doing as well, how much more rate cuts really this system would need? And this has all got to do with what happens in nature. And by nature, I mean the markets, currencies, human action. And you can read about that in Fiat Money, Inflation in France, written by Andrew Dixon White. He says that when you start inflating the system or issuing currency out of thin air, yes, you improve the economy, but ultimately those issuances lose their power. Then you have to issue more currency. And every time you issue currency to keep the economy going, you have to do it more. It's almost like a drug addict starts out really taking small hits, right? And then becomes more and more pronounced. And at one point as well, the drug has no effect, and the drug addict, unless he or she does something about it, they will die. And it's the same thing for this financial system we have. And I think we're close to the point where it dies. So yeah, and with that, I'll come to tokenization. So the key word is token. What is a token? Well, it's just a representation of a real thing. So right off the bat, I don't like it. When I talk about gold and silver, that you should have some to protect your savings. I mean like silver coins like this, not a token. And yes, I know this is all to do with this new Genius Act, tokenization, cryptos, that it could be for good for gold and silver. But ultimately, I think the best thing is to have these handy, physical gold. And here in the UK, I know it's getting expensive gold. You can get one of these. It's a quarter of a sovereign, or half a sovereign, excuse me. I think that's worth about 280 pounds. So yeah, that used to be the price of an ounce, right? But yeah, tokenization, I don't know how it would work. It would probably be, of course, because the US is saying that they don't want to do central bank digital currency. So I don't think the Fed or even the Treasury, could the Treasury tokenize the gold that it supposedly has in Fort Knox? That's possible, but I don't trust government nor the bankers. So yes, they might give you some gold tokens, Treasury gold tokens, but the only way I would trust it is if I would be able to redeem it very easily. If I could go to any bank that's regulated by the Fed, the Treasury, go to your own bank and give, show them your token and ask them for a gold coin, a gold bar, or whatever it is. If you could do that, then yeah, I kind of would trust it a little more. But yes, a token is just a representation. So that's the way I see it. And I think they will want you to give up your gold. They might not make you give up, but with what's happening, the gold price in fiat dollars is going to go through the roof. And I spoke about that with Andrea Cecchi the other day, and I think it was a great interview. I'm going to put it up here in the cards. And he said that you should keep your gold and silver, hold on to them for dear life, because they're going to lure you into getting rid of it at really high prices. And do you really want to get rid of it for more fiat dollars or maybe a token that you know nothing about? No, I would hold on to it, and I don't trust tokenization one bit.
A rare exception occurred on July 16th, when Mr. Trump seemed to contemplate sacking Jerome Powell, the chair of the Federal Reserve. However, even then, the reaction was relatively muted, marked by a brief rise in Treasury yields and a decline in the dollar. Mr. Trump reversed course. Business returned to normal. The following day, American stock markets hit all-time highs. In his outlook, MarioInnecco critiques the relationship between former President Trump and Fed Chair Jerome Powell, suggesting Trump is pressuring the Fed to cut rates through a strategy of institutional intimidation. He highlights the irony of the Fed's spending scrutiny, given its power to print money. Moreover, Innecco reiterates his stance against central banks, viewing them as monopolies incompatible with free markets. He warns that the Fed's actions risk a crisis of confidence in the dollar. Financial research firm Morningstar reports that the standard metric for measuring the dollar's strength against other currencies declined by 11% in the first half of 2025, marking the largest decline for a first half of the year since 1973. The first 6 months of 2025 was the worst 6-month decline in the dollar since the second half of 1991. President Donald Trump defended the weakening U.S. dollar during a conversation with reporters Friday. "Well, you know, I'm a person that likes a strong dollar, but a weak dollar makes you a hell of a lot more money," Trump said in a media Q&A. Let's get back to the interview.
Back to the main topics, and President Trump and the chairman of the Federal Reserve, they met a couple of days ago. There's this question now of whether the Fed is abusing its spending power in terms of renovating its headquarters and other buildings that they've been renovating, like the Martin building, which I've never heard of. Their headquarters is the MarioInnecco building. But one thing I would say is that you would think the Federal Reserve would just print the money. They don't really need taxpayers' money to spend. So I think what's going on here is that President Trump is using a strategy I read about. It's called flooding the zone, which is basically attacking an institution from all sides to try to make them do what you want for them. And I think it was quite telling towards the end of their meeting. Someone asked President Trump a question. He said, "Well, I'm not unhappy with him. I just want him to cut rates." And he patted Powell on the back. Powell smiled. So I think that was a very subtle message to him. Yeah, you cut rates, we'll forget about all this investigation about the renovations. And I think later on yesterday, I think President Trump said, I think the Fed is ready to start cutting rates many times and aggressively. So yes, they have their meeting, 2-day meeting this week, Tuesday and Wednesday. And the markets don't expect them to cut, but I think there could be a surprise there. And as for the Fed, well, hopefully all of you know that I'm totally against central banks. And why is that? Well, because in a supposed free market, small government, sound money economy, you don't need a central bank. Central bank is a monopoly. You don't need a committee of 12 or how many ever people they have on the FOMC to decide what rates should be. The market should decide that. And I've been calling for the end of the Fed and all central banks for many years. And I've got my End the Fed mug here. This is Charles Lindbergh, not the aviator, but his father, Charles Lindbergh Sr. He was a congressman, I think from Minnesota. He was originally from Sweden, Charles Lindbergh. And this is what he said just prior to the Federal Reserve Act being signed into law. And this is really good because I've got the quote here on the mug. And yeah, you can find this mug in our merchandise store. There's a link below. But he said, this Federal Reserve Act establishes the most gigantic trust on earth. When the president, Woodrow Wilson, signs this bill, the invisible government of the monetary power will be legalized. The worst legislative crime of the ages is perpetrated by this banking and currency bill, Charles August Lindbergh Sr. So, ironically, his son, the famous aviator, he was the first one to cross solo the Atlantic. I think it was 1927. His baby was kidnapped and died. He was sadly died. And his wife, Anne Morrow Lindbergh, ironically, she was the daughter of a major partner at JP Morgan, one of the owners really of the Federal Reserve Bank of New York, and Spencer Morrow Lindbergh. Her father was Dwight Morrow, a major partner at JP Morgan and Co. Just wanted to put that out there. That's an interesting factoid. Yeah, so to me, the best Federal Reserve is no Federal Reserve. But what I think this conflict between Trump and the Fed is doing is creating a crisis of confidence in the dollar. And why do I say that? Well, because we're seeing a melt up, and it's not because the economy is doing great. If the economy would be doing great, of course, Trump wouldn't want the Fed to cut rates. What's doing great right now are these financial indicators like the stock market, commodities, not maybe the bond market, but it's pretty steady for now. But someone asked Trump about the dollar, and he made a really interesting comment, and I've got it here. And this was his reply. I don't know who asked him the question, but Gold Telegraph posted it. And he said, "I'm the person that likes a strong dollar, but a weak dollar makes you a hell of a lot more money." So what does that mean? It doesn't sound right, does it? Well, he's talking here about the Cantillon effect. It makes him and his fellow one percenters, fellow billionaires, a lot more money because a weaker dollar makes assets look much better. It makes it makes the system more flush with liquidity, and the people at the top, they're nearer to the printing press or the central bank than, let's say, someone working a minimum wage job is. So that's why he's saying he likes a weak dollar. It makes him a hell of a lot more money. And I commented, I said, it makes more money for those who are closest to the printing press, the Cantillon effect. But for the masses, it's a massive tax, currency debasement, aka inflation. Yeah, and inflation is not the CPI, and I'm going to keep going on about that.
The gold to S&P 500 ratio stands as one of the most powerful yet underutilized indicators in the investment world. This key metric has repeatedly signaled major market shifts throughout financial history, providing astute investors with a window into potential opportunities before they become widely known. Beyond comparing gold to the S&P 500 alone, examining gold against a balanced 60% stocks, 40% bonds portfolio provides additional insight. Gold broke out against this balanced portfolio benchmark in early 2025, similar to breakouts that occurred in 1972 and early 2002. While some pullback is expected, this breakout from a 10-year base suggests significant strength in gold's relative performance. Short-term price predictions for gold suggest an increase in its value and demand over the next few years, at least until 2030, indicating that the price could gradually rise to around $7,000 an ounce. However, price predictions beyond this date may depend on various scenarios. As confidence in fiat currencies erodes, could we be witnessing the early stages of a global monetary reset centered on hard assets, such as gold? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.